Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Norma Linda. And we're joined by Bloomberg's Natalia Kenijevic. And Natalia, what are you looking at today?
Cava is one of the biggest stock movers today. The ticker is CAVA. The stock is down by 17%. This is the biggest drop on record. It came after the company reduced its forecast for the full year. So, for example, now sales at established locations will expand at 6% for this year. Previously, the company expected an increase of as much as 8%. So the message is very clear. Customers here in the U.S. are spending less on restaurants. And it's interesting also that results come just a couple days after another restaurant chain, Sweetgreens, right, posted disappointed earnings outlook, and the stock also plunged at the most on record, if I'm not mistaken.
No, it's really interesting, especially thinking about the fast casual situation. I immediately think of a Chipotle, but I mean, Cava's the Mediterranean version
Do
of
either of you
that.
guys go there?
I've been.
I've never been.
Yeah.
You? What about you, Paul?
No, I haven't. I'm not a big fan of that.
It's not for me.
Feta cheese, and feta cheese is in everything. Tom T and I were looking at the menu earlier. So,
But a lot of people are big fans, so, really interesting. But you're watching On Holdings.
Right. So this is a retail space. The company's ticker is ONON. The stock is down by almost 3%. This is a Swiss maker of sneakers backed by Roger Federer. So the move comes after Jefferies analysts downgraded the stock to underperform from hold. Also, they cut price target to $40 from $50. It's currently trading at $48. And this is also the lowest price target across all Wall Street analysts tracked by Bloomberg. So the main idea here is that Jefferies says that sales growth is already peaking. And notably, this downgrade comes just a day after the company posted better than expected forecast, and it boosted its sales outlook for the full year. Notably, when we look at sales across global regions, we saw that there was a 100% increase in revenue coming from Asian markets, about 17% growth coming from the US. But when we look at revenue breakdown, we know that Asia accounts for just 5% of revenue. And here in the US, this is the most important market. Revenue accounts for about more than 50% of total revenue comes from the US. So it's a big market.
Yeah, I mean, I'm looking at the street, though. We're seeing 87.5% of Wall Street has a buy holding, 28 buys, 2 holds, 2 sells. Hedge Eye has a short call in it.
Okay. CoreWeave, what's happening there?
Right, so the ticker is for the stock CRWV. This is a big story we have been following this year. This is a company that previously went public. The stock is down by 11%. So first, let's talk about second quarter results. On the one hand, we do see that second quarter sales tripled to $1.21 billion, above expectations. However, net loss was wider than expected. And more importantly, for the third quarter, the company's sale operating income forecast came weaker than analysts expected. So the main message here is that on the one hand, the company has a really strong pipeline of orders even from new clients such as OpenAI, but as Bloomberg Intelligence is saying, it can come with the cost of pressures on margins and cash flow.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.